Hi, so today I thought I'd go through an industry that's had a lot of attention at the moment, and that is the drug manufacturers. No, I'm not talking about illegal drugs, I'm talking about the big pharmaceuticals. And we're going to be looking at the top 6 drug manufacturers of the world. That is Pfizer, Roche, Novartis, Merck, Johnson & Johnson, and Sanofi. Now I'm going to compare all of these together, and by the end of this video I'm going to tell you which one I think is the strongest and my most favorite out of these 6. And if you're new to my channel, well, welcome. My videos are about investments that anyone in the world can make. And today, generally what we're talking about are all the companies that manufacture and develop drugs that are both for prescription use and for just over the counter. Now, the main objective of all of these companies is to make a medicine that they can go on and then brand and then hopefully patent. Now, if they can get a patent on this medicine, well, it means that no one in the world can make this medicine and they can't do it for a number of years. So that means if another company wants to compete for a specific medicine area, let's say, I don't know, it's a treatment for back spasms or something like that, well, it means that they can't just copy what's already out there, they have to go and develop it themselves. Now, I think this sounds fair because if you're an inventor and you've created something, well, you don't want a competitor just coming in and just copying you exactly and then selling it as well. Because you're the inventor, you did the hard work and you should reap the reward, right? The Western world has an aging population and the need for medicine will not be disappearing anytime soon. Now, a patent-protected product that is popular means the company can charge a very high price without competition. It isn't a free market, so the companies can make really high margins here. So the industry is now a mature industry. Groundbreaking drugs are less often to be discovered and the development costs of these drugs are now far, far higher than they once were. And because it is a mature industry, it does also mean it is a slow growth industry. So the explosive growth is not as common anymore. And since 2012, the industry has been growing at only about 3.5% per year. Governments interfere in the industry because medicine prices, well, it's a political subject. So the companies in the industry are subject to uncertain taxes and changes to the rules that they operate in. It's tough to play a game when the rules are often changing. US companies are also under threat from cheaper manufacturers in China and India creating substitutes. And many of the drugs that the big companies own, well, they weren't invented by them. They were acquired. So the big companies are staying big and relevant, not through innovation, but through acquisitions. Now, pharmaceutical companies can make enormous profits by controlling the knowledge about how they make certain drugs. Now, economic theory about market competition would tell us that if one person is making a lot of money, well, people are going to come in and start also making money in that space because they see the opportunity, therefore prices will go down. Now, that's exactly what manufacturing companies throughout the world have been doing, especially in places like India, where they've been making generic drugs for patients in poorer countries. See, these big companies are using their intellectual property rights to constrain the operation of market forces to their benefit and then to the disadvantage of the world's poor. So the first test case of the rights of corporations to profit versus the rights of the world's people to life was fought in South Africa in the late 1990s. Now, at the time, as many as a quarter of its people of working age were HIV positive, and the government decided to ignore international law and import generic AIDS drugs from India. And the price difference remained staggering. It was $350 for a year's supply compared to $10,000 for the branded medicines from America. So a poor country like South Africa really had little choice. Now, South Africa made the case that this was a public health disaster, but the US trade representatives took action against the South African government. Eventually, this case was withdrawn in 2001 with the agreement of a deal on a reasonable pricing and availability of AIDS drugs. But a lot of people had to die. Now, I can actually understand both sides of this moral dilemma, but I just wanted you to be aware of it so you can make your own decisions. So Pfizer is the largest of all the pharmaceutical companies, and for any company to be over 150 years old, well, that's incredible. Now, they have hundreds of different drugs and treatments that they have on the market, but the one you're probably going to be aware of, that you've heard of before anyway, is Viagra. And they're also one of the major players in developing a vaccine for the current pandemic. Roche, they are a Swiss-based pharmaceutical giant and they really play in the cancer treatment area, and they also are developing a vaccine as well. Now, they actually have the world's top cancer treatment drug, and actually 3 of their products make up about 40% of their revenue. Now, you're definitely going to be very familiar with a lot of Johnson & Johnson's products. We're talking Band-Aids, Neutrogena, and a lot of Johnson baby care products. Now, along with these products, they're actually one of the highest paid drug manufacturers in the world as well. Next is Sanofi, and they're a Paris-based pharmaceutical giant, and they're best known for their insomnia treatment Ambien. Now, they're actually also trying to develop a vaccine for the pandemic, but they seem a little bit further behind than some of the other guys. Next, we'll look at Maersk or Merck. It depends what country you're from, how you're going to pronounce this. And they develop a lot of cancer treatments as well. And like Sanofi, well, they're actually a little bit behind the 8 ball in terms of a vaccine for the current pandemic, but they are trying. And last, we've got Novartis, and they're another Swiss-based pharmaceutical giant, making a large part of their revenue from a psoriasis treatment and a multiple sclerosis treatment as well. But just like all the other companies that we're going to be looking at today, they've got like hundreds of different products in all the different areas of medicine. Now, literally every one of these companies that we're looking at today, they've been involved in some sort of scandal or some sort of misconduct over the years. And it would just take me hours to go through all of the different things that have happened to these companies in the past. So I'm not going to bore you with those details. You can go do that yourself if you feel like you want to invest in one of these companies. Today, I'm just going to go through the financials and just see whether we can find a bargain price. So now I'm going to take a look at the financial position of each one of these companies, and we're going to compare them all against each other. Now, there are 3 key areas to the health of any business. We want to see that they can manage their debt, whether they're growing or not, and whether they're a well-managed company. And then we're going to go look for a good price. So we're first going to look at the debt to equity and the current ratio for each one of these companies. For the debt to equity ratio, I want to see it really below a 0.7. And for the current ratio, I wanted to see it above a 1.5. And what this really means is that they can handle some sort of downturn in their business in the short term. So Maersk and Novartis, well, they're the only ones here with some sort of issue. Now, in this table, what I've looked at is the earnings per share history and the book value per share history for each one of these companies. And what we want to see is we want to see an upward trend, which just means that the company has been growing over the years. It's as simple as that. Now, just because some of these companies aren't growing doesn't mean they're uninvestable. But the one I like here the most is Roche. They've shown an earnings per share and a book value per share in their history to both be trending in the right direction. Okay, now here in the next table, what I've looked at is the historical return on equity, the free cash flow. And now I've also had a look at the dividend situation as well, because all of these companies pay a dividend. Now for the return on equity, historically, I wanted to see this above about a 15. Some of these numbers are actually really high, which is great. Now, free cash flow, that's really the money that's left over for us as the investor. Now, the company makes a decision on what to do with this free cash flow. Maybe they do share buybacks, maybe they pay a bigger dividend, but we really want to see free cash flow growing. Now, as you can see with the dividend yields here, they're all above 2%, with Pfizer being the highest at a bit over 4% at the moment. Now, the dividend safety, if it's below about a 0.7, it should be able to handle the dividend that they're currently paying. Higher than that, well, it's getting a little bit risky. Now, the last table we're going to look at today is whether we're getting a good deal here or not. Now, as you can see, I've already calculated the intrinsic value, my buy prices, and then compared it to the current share price. And if you want to know how I find this intrinsic value and my buy prices, well, I've got a free intrinsic value calculator in the description below, and I also have a video explaining exactly how to use it. And now this is a little bit disappointing. All of the current prices for all of these companies are way above my buy prices. They're really mostly at intrinsic value already. So are any of these 6 companies a good company to invest in? Okay, so if I had to pick one, I would pick Roche. So I would pick Roche because their earnings per share, their book value per share, and their free cash flow are all trending upwards. Their return on equity is also very high at 35. And I think their debt is manageable. But I really wouldn't invest in them because I'd be overpaying. There are so many investments out there and I have no reason to overpay for anything. So what do you think? Do you disagree? Let me know in the comments. Now make sure to subscribe to my channel before you leave to see my next pharmaceutical companies analysis video, where I look at AbbVie, GlaxoSmithKline, Bristol Myers Squibb, AstraZeneca, and Amgen. And thanks a lot for making it all the way to the end, and I'll see you in the next video.